Morning guys. So we had another inflation number last night out of the US, also weaker, which shows the US economy is still doing pretty well. Everybody thinks that inflation's under control now and interest rates will peak. The odds of a rate rise in the US in July, I think it's next week, the 27th, so 13 days away. On the 27th is still a move of 25 basis points, is still over 80%. But now the market's pricing in, after last night's move, no more rate rises. In fact, that there'll be a rate cut in the first quarter of 2024. So that's interesting, and the US dollar is now starting to really tank, and they've been exporting inflation, and that will continue. So a couple of charts I want to show you is, so if we look at this one, this is the inflation, and so US dollar is rallying, and that's importing inflation, and now it's been falling, which is, as you can see, exporting inflation. Same happens here in Australia, is that as the Aussie dollar increases, it makes the price of offshore goods cheaper, and so you'll buy that and effectively import inflation. And whereas as the Aussie dollar falls, it makes offshore products more expensive, and so you buy local and therefore export inflation, or you're not increasing inflation. Yeah? That's the concept. Other chart I wanted to show you is this one, which is effectively the cash coming back out of bonds and the US Fed into where's it going, and by the looks of it, it's heading back into US stocks, as we can see the stock market starting to push higher with the idea of cheaper money coming with interest rates peaking. We're going to be seeing US stocks pushing on, and they have. I think I've shown you the wall of worry, or the what's his name, Mancris, the cycle of the markets, where it goes from euphoria to panic to wall of despondency, then you get this wall of worry across here, and now we're starting to there's a bit of belief coming back into the market, and then we'll get that back into the euphoria stage, which is over here again. Excuse me. That's the cycle of the market. But earnings season starts tomorrow in the US with the major banks kicking that off tomorrow with their earnings seasons. With the current environment, and particularly the banking scare that we had earlier in the year, I wouldn't expect too much out of the season. There might be a number of beats, because the expectations of returns earlier in the year when they lined these up would have been lower than what they probably are now. So you might see a number of beats, which will give the stock market more added fuel to the fire. Quickly go through the majors. We've got the US dollar clearly tanking. It's gone through all support levels. What's going to pull it up now is just going to be that the market's overextended, and it'll have that retracement, but there's no technical reason for it to turn other than it's way overdone, and what goes down must come back up. Or in the terms of the euro, I see Deutsche looking at it for 120 by year end, whilst JP Morgan are looking at it 105. And they're two of the biggest players in the market, Deutsche Bank and JP Morgan. JP Morgan predict the euro dollar of 105 and Deutsche at 120. That's a big spread, but right now it is way overdone, overextended, and needs to have that retracement, which I would expect over the next couple of days. Same with the cable, way overextended. Yen, not so much. It is oversold, but it is still in an uptrend. So, now it's official. That uptrend's officially broken now that it's gone through these lows. So it's not in an uptrend, but it's not yet confirmed as a downtrend. not on the daily time frame anyway. And then the Aussie dollar has just had a great run, and that's all off the back of commodities and the weaker US dollar. We've got oil just absolutely on fire, even copper doing really well, and the commodity index doing well, which will support the Aussie dollar. However, there's that new round number. You can see here it goes from, I can put one in here, Aussie loves the round number, you guys should remember that. So 67, it stops at 66, stops at 65, stopped at 67, stopped at 68, stopped at 69. It's rather predictable. May go through there with the US dollar where it's at, but I would expect that it'll probably come back and have a look at 68 over the next couple of days. And that's really about it, guys. Looking ahead, what have we got next week? We'll start off Monday morning with some data out of China that would be interesting to watch. Canadian inflation, Kiwi, UK inflation, Aussie unemployment. A bit of volatility, some minor numbers globally speaking. I wouldn't say the Canadian pound or Kiwi inflation is really a major global mover, but still enough to sort of provide volatility and opportunity. So on that note, have a good weekend, stay safe and trade accordingly.